Yo, what is good, troop? Welcome back. We got a little trade recap for y'all. This is today's streamed trade, like every single day. If you want to watch my stream trades, it's all free. Everything I do is free forever and always. You can tap into my kick. There's gonna be a link in the bottom. You can see the VOD where you can actually watch where we took the trade. But if you want to see us, we'll be live tomorrow at 9:30 if I'm not late. I'm basically late every time. But that being said, I want to teach y'all the trade that we took today, go over why I took it, go over my thought process, also talk about why there's a lesson in the shorts that took place here that a lot of people were taking. I can sit here and talk about implied moves all day. No one's going to listen to me. It's fine. You can keep trading whatever dumb strategy you have. There's a reason why when I take profit that the market completely changes state of delivery. There's a reason why. But if you're not going to take the time, you're not going to watch the bias video, I don't care. Okay, I made plenty of videos. You can check them out. They're on my channel. But more importantly, tap into the live, tap into the community. We run it up for free. You literally can learn everything you need to know for free if you want to and make money off of me just talking and dancing and moving my hips around. We went absolutely nuts and bananas today. For example, wait, you can't even see.
Post some fucking profit!
Okay, we went crazy, you could say. We went stupid, you might even say. Okay, so how do we take this trade? Basically, we'll go over the open. Off the open, essentially what I saw is that we had an order block down here. We have what's referred to as a session density. I have a video coming out on that tomorrow or tonight talking about how session densities work. It's basically just an overlapping high or low, so you can have a range of where you would expect price to have some type of reversal around. You can see we had an order block right here. You have a 5-minute order block here that created a 2-minute fair value gap, no 1 minute, just a 2-minute first fair value gap. That's what the FFVG stands for. I have a video series on first fair value gaps if you want to learn about those. We open up on this session, these session highs and lows that have already been swept. So we want to see if there's any sustained liquidity there. We have all these easy low resistant highs here, so I don't expect it to be particularly crazy. But in my head, I like to establish both an actual bias and then my internal bias. My actual bias is that we are underneath the previous daily low. So we're either going to take a bearish confluence lower or a bullish confluence higher, or it's going to chop around PDL, which it did do all three of those today. Those are what we refer to as the implied moves. Again, video somewhere popping up, maybe if I remember to tell you to watch that, whatever. Go watch it if you actually want to learn. If you don't want to learn, it's fine. Okay, so we have our 5-minute order block here. This is a reaction to this. It's a failure sweep on the session level liquidity here. Actually, it is the session level liquidity right here. You can see there's a session density. It got moved around. This is that session density. It's a reaction to that, creating an order block and a first fair value gap. You can see in my head, I'm thinking two things. If you go on the video, on the stream, the VOD is in the description. You can see I said basically two things. I don't want shorts till we get past this, inverting that first fair value gap, creating a bearish breaker block out of this range, and then we target all of these internal lows, probably getting a little bit choppier around this area right here. Probably the first fair value gaps in here. These obviously have a first fair value gap. Why? It's because this is the order block range that essentially was created from the session highs and lows that was able to push us into an expansion, consolidation to an expansion. So this is a qualified order block that creates a first fair value gap. So obviously if I'm taking shorts, I would want to see the reaction onto those first fair value gaps in there. So ultimately that was what I was waiting for shorts. You guys were taking shorts off the wazoo, off open. Chat was talking about shorts. We were actually looking at NQ off the open. We were looking at NQ because we tapped into, you can see, we tapped into this session level density, but it didn't have a first fair value gap. So in my head, I knew we had to create one. And so I was looking for that to be created and maintained across multiple time frames. And if you can see, we only created on the one, I believe the two, but no three. There was no three. There's no 2 or 3. So it wasn't being passed along time frames. So that's in my head a sign of a sweep. You want to see those inefficiencies travel, start at a lower time frame and build up to the 2-minute, the 3-minute, the 5-minute, right? You want to find your entries between the 3 and the 5, and you can see you end up breaking structure. The reason why I chose ES was that I saw that we had a session density we had not tapped into at this point where NQ was already at. So I knew that if I wanted to take a trade, I would prefer to take it on ES once it reacted to the session density or the first fair value gap all the way back here, right? Again, my entries are on those internal breaks of structure, which I'll show you. You can see we come down here, we react to that first fair value gap just like that. We broke structure. You can see we created a 1-minute first fair value gap and a 2-minute first fair value. There's your 1-minute first fair value gap. There's your 2-minute first fair value gap closing here. Okay, boom. No internal breaks, so no entry. no internal break, so no entry. You can still create a fair value gap. You can see still no internal break. Buy side sweep, does it move to the downside? The answer is no. Therefore, there's no liquidity at this certain point. We have an internal break. I added a single contract here. Okay, I added a single contract here. And then we had an additional entry on the 2 minute, I think. Or was it an additional 3? It was a 2 and a 3. Wait for the 3, hold on. We had another 3 entry, I think. That's this guy right here. Another internal break. Boom, there was another entry here. My stops are going underneath the order block range. $140 loss on the inversion of that first fair value gap. If that first fair value gap gets inverted, what this means is that order block here that we had from all the way back here is not strong enough to support the expansion. What am I targeting for my take profit? Well, considering that we're underneath PDL, I am targeting PDL as my first take profit, which is just shy of EQ range. Now, I did actually add on while we were moving, so I was taking this on multiple accounts, but this is my live account that saw nearly a $400 gain, but then my actual funded accounts I'm trying to pass, thousands were made from just this simple implied move. And then we did have a first fair value gap to the downside that we want to make sure we inverse, right? We have a 1 minute first fair value gap right here to the downside. This is the first fair value gap that we formed off of the order block range to the downside. So you don't want to just look for things that are going to help you. You want to look for things that are going to screw you, right? And so we know that this could potentially screw us. We want to see this get inverted. And then we do see this get inverted. But more take profit points or things to consider. Nothing else back here. Just a bunch of internal highs that we're going to be targeting. We have another session density in here, so I would expect price to be consolidated in here. But more importantly, we have first fair value gaps, EQ range, PDL, and a breaker block. So yeah, my take profit is super strong because why would you want to hold on those reactions? You have first fair value gaps that we're holding the inverse on with a breaker where equilibrium is. That doesn't make any sense. Okay, so I held on the inversion. I added on the lower time inversion. I think it was like a 2 minute or 3 minute. I don't remember where it was. Yeah, right here. There it is. There was the 2 minute inversion. So I did actually add here. I added a lot more here. I think it was like 2 more. 1, 2, okay. And then boom, back to the 5. And then you'll see, again, this is just my live account. And price just completely pulled all the way up here. What are we reacting to? To our left-hand side. We're just coming up to this area of previous consolidation. So we should expect a level of consolidation. Areas of previous price action are not indicative of future movement. That's not a really good way to look at it. But can definitely have similar behavior, especially if it's consolidated. Because there's a reason price is consolidating. We have a buy side sweep. Does it move to the downside? The answer is no on a higher time frame. I moved to the 5. I'm staying on the 5 because that's going to tell me more about liquidity than a 1 minute or 2 minute. Because the 1 minute and 2 minutes are going to keep creating fair value gaps. Now, sure, we could have this sweep created a fair value gap move to the downside. So I want to see that fair value gap go from the 1 to the 2 to the 3, and then I'll exit. Once it moves, once it gets to like the 3 minute time frame against me, I'll take an exit, right? Because then we'd have a bearish order block forming against us with the fair value gap inefficiencies. It'd be a bearish order block underneath a previous daily low, lower, targeting all these internal sources of liquidity. And so you're always aware of things that can screw you. If you don't know why that makes sense, go watch Daily Bias and you'll understand why. Bearish confluence underneath a previous daily low, lower, right? But right now we have a bullish confluence underneath previous daily low, higher, right? And so everything is fine, everything is dandy. We want to make sure that buy side sweeps continue to not break structure to the downside or create inefficiencies, and they don't. We're fine. It's scary, but we're not doing anything crazy. So I'm moving my stops to the external sources of liquidity here because they can't be swept. Boom, and we're out. Right into EQ range. You can see EQ range is an adjustable area where prices, essentially, it's estimating where price should consolidate at. And you'll see it did do just that. We are consolidating around this area of price action. You can see, then after this, we liquidated lower. Well, there was another implied move here. Bearish order block down to EQ. Bearish confluence down to EQ on PDL. Bullish confluence under PDL back up to PDL. So we had 2 implied moves here, 2 trades. I did take that trade in the PM. It was like very quick though. Not even worth mentioning. But this is a pretty clean move. For me, it netted like just around 2 bands across all my accounts. So I was pretty satisfied with that. But a lot of people got induced on this short right here just because they saw the volume of the morning. That's not how this works. You have to target your external range liquidity. Where is your external range liquidity? If it doesn't have a first fair value gap, it's going to have to make one. If it doesn't make one, that means it's still inefficient to the downside, right? We had pointer efficient breaks of structure to the upside, so I'm going to see those hold. If they break structure on efficient breaks of structure, what this means is that price is going to keep consolidating. But we didn't do that. We continued to break structure in an efficient way away from those pointers. Those pointers were on the 2 minute time frame. If you don't know what pointers are, again, videos on this as well. You can see it right in here. Boom. Efficient breaks of structure. Those are all my entries. My stops are just trailing against those, moving towards high resistance sources of liquidity. So going from here to here, here to here, here to here, then here to here, all based off of the pointers, right? So It's very simple stuff. It's just you have to think of everything at once, and that's the difficulty in trading is being able to get in a trade. Oh my god, this camera, bro. I'm way too rich to be having camera problems. What is this? Genuinely. Anyways, yeah, that's all I have to say. It's gonna throw me out of the loop. Hopefully you learned a little bit of something here today. Take care. Join the streams, join the kick, join the lives, join the community. I'm here to help you learn, here to help you grow. Anyways, boys, I will see y'all later. Bye bye.